Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I wanted to talk with you today about how to set yearly Forex profit goals. And there's four steps that I think I'll go through that I thought might focus our attention on, why we do goals and how we go about setting some kind of a reasonable goal. I'm in the kitchen today. It's a beautiful dark, overcast, almost snowy winter day in the Lakes region of New Hampshire. I live in a 1775 antique cape, and we've been here about 8 years now. And it's just been really, really nice to have this experience. It's end of January of 2025, and we'll be moving into Feb here pretty soon. And that's when the snows come pretty heavily up here. As I said, and the snows come pretty heavily. That's not exactly a goal, but it is a perception of a likely event. And that's really what setting a goal is. You have some experience doing something, right? And so you have the perception of your ability to continue to do that. And so therefore you can take some sample size of data and project that out forward to say, well, I should end up as X. That's the framework of goal setting, I guess. Well, why do we need to set goals? You could say on the negative side of that, geez, I want to make $100,000 a year next year. Oops, but I've only have a $20,000 account. How am I going to do that? Oh, I could trade 500 to 1 like all these fools do, and I'll probably lose my $20,000. But I don't know that getting into it because the education is bad, and so I'll lose my $20,000. You have to base a lot of this stuff on fact and not fiction, right? Well, how do you know fact from fiction when you're getting started or you're an intermediate trader? You got maybe under a year of experience trying to get into this stuff. Excuse me, I'm in the final throes of bronchitis here. I'm healing up. I have to cough a lot. So, you have to say, well, you have to set reasonable goals. Well, how do you know what's reasonable for you? Well, your trading metrics form the base of your analysis. You say, but I have only got 6 months of trading. I don't have any metrics. Well, you do have metrics. You got 6 months of metrics. 6 months of metrics. If you're a position trader or a swing trader, you don't have very many metrics because you're only trading a couple of times a week or maybe once a month. That's why I suggest that you do day trading. You need to learn how to fail efficiently so that once you learn what not to do, you can learn what to do. And you only do that by repetition. You don't get repetition by being a position trader. Taking advice from these guys who say, oh, you're safe by trading up on the daily chart. Really? Where do you set your stop? Are you good enough to judge in your entry analysis that the price is going to go in the direction that you want it to go in and not go to your stop? And if you're doing position trading, your stop isn't 20 or 30 or 40 or 50 pips away. Because you've got to let the price move around over the daily range in order to get going. I just have a hard time understanding how anybody can set any kind of goals or determine their success or viability or whatever of their trading. Now, sure, if you're a position trader, you can go in and trade once a month or once every other month, and you can make, if you really know what you're doing and you're lucky, and you can make 300 or 400 pips maybe every 3 months. So you've got 1,000 pips that you've made. What size bank are you trading? If you're experienced, you're probably trading 10 or 20 lots. Well, you make some money. But when you're getting started, and you really don't have that confidence to let the price run, or you don't have the patience to let it run. God, I don't have any patience to let a trade run for 3 days, let alone 3 months or something like that. And I really don't agree with the long-term position trading in Forex anyway, just because of the structure of the Forex market and the purpose of it. But I digress. In all the clutter of information that you have out there, your trading metrics are going to be the base of the analysis that you use. Of course, as I've just mentioned, the issue with metrics is they take time and a large sample size of trades in order to be, quote, valid. So what are you supposed to do? I mean, if you base your win-to-loss ratio, for example, on 10 trades, and then you go to project what it's going to be like 12 months from now, I don't think you have enough data to really determine that. I don't think you really have enough experience to have consistent trading if you have less than 6 or 8 months of experience. You've got to have up market experience, down market experience. You got to trade chops, you got to trade range, you got to trade trends, you got to trade radical news reversals. You got to go through a couple of NFPs and see what that's like. And the more trades that you do, the more experience that you're going to gain. But man, I tell you, if you don't have 6 months of trading a couple of times a day, every day, you don't have enough experience. If you don't have, well, the general range that I give my students is you need about 100 trades to become consistent, or at least to have confidence that your trading has become consistent. So the metrics that you develop during those first 100 trades really aren't valid because there's so much variance in them. What are you going to do? Are you going to include the metrics average that you gained in your first 3 months of trading with the metrics that you have put up in your 6th month of trading? Those are going to all average out to some ridiculous flatline mean. Doesn't mean anything. That unless you have 100 trades to establish the fact that you're consistent with what you're doing. Now you can be consistently wrong. It doesn't matter. It doesn't matter if you're a loser and you're consistently wrong. You need 100 trades where you are doing that so that you can have enough of the metrics to step back and say, oh, this is the problem. Unfortunately, most people don't know how to take the data that they have, those 100 trades or those 250 trades or whatever they end up being in 6 months, and parse that data out into metrics or reasonable guides of where the good decisions are made and where the bad decisions are made. How do you determine good decisions from bad decisions if you don't have at least 100 step-ups to the plate? How do you do that? You don't. It's the second 100 trades that you do where you take the consistency that you've had in the first 100 and you simply apply that and start tweaking with it and watching it as the metrics progress over, say, on a weekly basis, and you go, geez, I should be a 60-40 trader. Oh, well, this week it turned out I'm a whatever. In that second group of 100 trades, you have to separate those trades that you're doing, trade 101 through 200, from the first 100. The first 100 were just set up. They were base building. So now you can go in on a weekly type basis and say, gee, as I said before, I'm a 60-40 trader, but this week I'm not a 60-40 trader. Why? And then you look at the other metrics. I teach 4 specific metrics in my coursework. And so we go back over those metrics and we calculate what they are, and we've calculated them in the previous, and we can find out by looking at the metrics, not as ratios, but as equations. We can look at that and say, oh, this must be the reason why I'm doing that. When am I doing that in my trading? Then you got to go back through your transaction log and you look at it and you say, oh, Jesus, why did I go into that trade? I made a long trade and it was stupid. It was obvious that there was a congestion zone there and price dropped away from it. And so Why did I take that trade? That's where you learn from your metrics. But it's very difficult to do that kind of analysis in the first 100 trades. I don't know, maybe 50 trades is okay. I don't know you. I don't know who you are. That's why I like to chat with folks over email and then maybe have a couple of video conferences and stuff in order to find out who you are and how you tick, because that's the only way I can help you. What, are you going to call somebody up or take their course and they're teaching the general stuff to general people? I don't see how you do that. How do you go into an algebra class and they teach at some base level? Is that going to satisfy everybody? No. I mean, when I have a student, yeah, there's a manual. It's 100 pages. I think the fast track course is 180 pages now, or 170 pages. I just added about 3 pages to it. So there's a manual, but you get my time in consulting. I don't work with 100 people. I don't want to work with 100 people. A few people at a time, digging into this stuff, talking with people, making friends with them, so that when the course is over, either we're done or we continue as peers, working and trading together and emailing back and forth, and then doing seminars and whatever that we feel like doing. And the more that interaction takes place, the easier or the simpler it becomes for the student to be able to do that type of analysis and say, okay, I got a metric disconnect here. That usually happens at this part of the trading. I'm going to look at my transaction register and try to ferret out what happened, why I made the decision that I made. You don't learn from your wins. You only jump up and down and have a nice glass of wine or a beer or something to celebrate your great win. You don't learn from that. You learn from your losses. Your losses are more valuable to you than your wins are. The trick is making sure that the losses are not planet killers. They're not risk of ruin type losses. I still suffer from that from my 40 years of real estate. I retired a millionaire by my investing in real estate, certainly not by my software engineering career or whatever, because I'd be in the same boat everybody else is. I paid cash for this house before I sold my other house and put another $40,000 into it in renovation work, because I had the money to do that from my real estate investment, not from my software engineering career. All you have out of your business career or your job, if you're lucky, is a 401k that you flip to an IRA and whatever savings you've been able to accumulate. But the jet skis and the $60,000 truck and the vacations to the islands or whatever the hell it is that you're doing, or just day-to-day living, chew through the income. How many people have not only disposable income, but investable income? You have to have money to save, but you also have to have money to invest. How many people have that? Not very many. Why? Because the system is set up to entice you to buy that $60,000 or $80,000 truck because it looks fine. If your thought process is that way, I can't help you in trading because you don't have the right attitude to take the time to do what I ask you to do. The fast track program is a 6-week program and we go balls to the wall on it. No tears. Does that mean that you've got all your metrics and your fundamentals and all this kind of stuff and you're ready to go and take $100,000 at risk and try to run that out? No. But you have the information in sequential order that is growing in its that knowledge grows to add to your experience to make you a better trader over time. And even though the course ends at that 6-week period, I want to get this stuff done fast. What do you want to do? You want to take a course and be a part of a Discord group for a year and fuck around with a manual, pay a couple of $1,000s for a manual that's going to teach you what a pip is and how to size your bank? Jesus, none of that stuff is in my course. You wouldn't believe my course. is not like anything you've ever seen, because it's made to get to the heart of things. What is a problem? How do you solve a problem? What's the problem that we're trying to solve in the currency market? What are the steps that you could use to break that problem down into consumable pieces that are in sequential order? And what are the conditions of the rules that you build in order to solve those individual problems? And how do you link those problems together, the solution to those problems together? That's what a real course is all about. I'm an educator. I taught karate and self-defense for 50 years, where it really counts. People's lives depend on my ability to convey to them information that will allow them to survive in a dark alley or whatever situation they may find themselves in. That takes time and experience. So I try to get the information in a short period of time and mold that. But then the hope is that the person will say, okay, I've got all this stuff, but now I need you to show me where to put the pieces. And more importantly than that, when. What do you do? How do you do it? And when do you do it? I can want to build a garden, for example. I know what's the what of the garden. Well, I got the dirt, I got a shovel, I got a shovel. That's the what. Well, how do I use the shovel? Oh, I use the shovel to, dig holes and put the seeds in and all that other kind of stuff. But if I plant that garden in the winter, it's not going to work. It's not going to do anything. I know what to do and I know how to do it. But if I don't know when to do it, I'm screwed. Nobody teaches the when part. Why? Because they're basing it on indicators. When this indicator goes off, then you do this. I got news for you. The indicator is a lagging price indicator. So you're doing something that you should have done 10 minutes ago. That makes a lot of sense. Try that on a golden cross. Doesn't work. So as you're working this initial part, now you might have been trading for 2 or 3 years and come to me and say, I'm not having the success that I need to have. Great. Let's put a break on what you do. Let's eliminate everything that you know. Let's go back to square one and let's start trading so that we're building metrics over a period of time. Let's show you how to analyze those metrics to find out where in the trading you should look at your transaction register to see why you did what you did that was wrong. It's a simple process. And you can do this. If you have any experience on the boards at all, you can do this. But you're going to need to understand what metrics you need to look at and how to use those metrics in order to point to your transaction register as to where the problem is. And it's only through experience that you're going to be able to look at the chart and say, why did I take that trade there? I've got this happening, or it was an NFP release in 15 minutes, or what the hell was I doing going in there, right? That's the kind of stuff that you have to look at. So first, why is setting that goal so important? It's because you can then track as you're going through the year. Let's say you have the ability to make 60% return on your bank. Does that sound stupid? Well, if you don't understand trading and stuff, you'd say, well, it's just crazy. You can't make 60% on your money. I don't know. I think you can. When you're starting out, can you make 60%? No, but let's get to 20% first. Let's pay the electric bill. Let's just do that and become consistent. So let's say you're getting started, and I've got you on that path where you are consistent, and you got a $10,000 account, and you're trying to make $2,000, which is a 20% return against that $10,000 account, trading one full lot, and you got $2,000 to pay your electric bill for the year. And probably more than pay for it. That's a place where you start. All right. So if you are doing the trading and in 3 months you say, geez, I'm really be consistent here. I've got this consistency. I'm making about $130 a month as I'm going through this, or $140 a month. I'm on track to make a couple of $1,000s a year. Well, what does that translate into pips? On a weekly basis, on a daily basis. And then you could do the math on that and say, well, I'm going to trade for about 200 days, or I'm going to trade for 10 months, or whatever it is that you're going to do. And you can just do some simple arithmetic and say, ha, I'm on track to do $2,500 this year, $500 more than I did last year. And then 2 months later, those metrics change and you go, whoa, wait a minute, I'm making $280 a month instead of 130. Well, what changed? What part of the metric changed? Oh my God, let's look in the transaction record and see where the successes came. Oh, I'm getting more pips. Why am I getting more pips? Oh, can I, with confidence at that point, change my profit target goal? Well, it depends on your confidence in your metrics and the time that those metrics have been generated over. And so you say, yeah, okay, instead of, well, I could go $2,500. I might even make $3,500 this year because I seem to be going up in my ability. I'm catching those big losses early and I'm getting out. That's a good thing. Or I'm catching this trend, or I've got, maybe you believe in a Bollinger Band and it works for you. And so you say, oh, I'm going to use this Bollinger Band now because you've got the experience to do that. You shouldn't be using a Bollinger Band if you got less than 6 months of experience. And I don't see any need for a Bollinger Band because it's lagging indicator anyway. Why don't you just learn how to trade first and then you just look at the chart? You don't need a Bollinger Band to tell you what the Bollinger Band tells you. For God's sakes. In fact, the Bollinger Band becomes a negative for you in your trading. Ask bank traders if they use Bollinger Bands, RSI, Williams percent, or no. They trade. So the setting of a goal is important because it gives you something that's an anchor in the future that you're working toward, and your metrics tell you your success in working toward that target. If you're not putting up the metrics to reach that goal, there's a reason. If you didn't have that goal, you wouldn't know that that your trading had changed for some reason. Now, maybe your trading only demonstrates competency in a trend. And there's been a long trend. You've been in the market for 3 months and there's been this long trend and you've been very successful building it. And now all of a sudden you get a blow off and a pin bar and a drop. And now over the last week or so, you're starting to form a range because you don't know how to trade that range. Well, that's going to screw up your metrics, isn't it? Because you're going to have to lose 15 or 20 times during a couple of month period of time in order to go, well, wait a minute, I don't know what I'm doing. What's this? This doesn't look like a trend. Oh, it's a range. And you go out there and you find out how to trade a range. That's why I say that you need about 6 months of experience so you meet all the problems in the market. And you could have 2 years of experience, but you got the wrong experience. If you're going to come and work with me, we're going to start over again. We're going to restart the clock. We're going to give you a really solid base of understanding those core principles that you trade. I teach principles of trading. And those principles then go into a methodology that I call process-oriented trading. And process-oriented trading includes how to set yearly profit target goals in your trading and why it's important to set them. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.